Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the Indian benchmark indices, the Nifty and the Sensex, ended the previous trade, that's on Friday, in the green after recovering sharply from the 4-day sell-off. But despite the recovery, the Nifty did post a weekly negative return as well, snapping the 4-week winning streak. Now, as we enter this new week, the question is, will the Nifty be able to sustain the recovery that it displayed on Friday? As focus now shifts to earnings of heavyweight counters for Indian stocks like Reliance Industries, HDFC Bank that came over the weekend, Nestle, Bajaj Finance, HCL Tech and many more, where we will tell you all of it over the next 90 minutes odd. Welcome and good morning to all our viewers and good morning to you, Shail.
Good morning to all our viewers. It's a fine Monday morning that we begin. Remember, now we are in the final round of April's monthly expiry. The session draws to a close on 25th of April. Let's start with the positives, ladies and gentlemen. The Nifty graph is right there in front of you, and we are going to get a nice uptick as far as suggestions from the GIFT Nifty are concerned, an uptick of between 75 to 90 points depending upon how the next 1.5 hours pan out. Now let's look at the positives. On Friday, the index shut shop 151 points higher, 22,150. That was not the only story. It actually made a very hard bottom in possibly the worst phase of the market as far as geopolitical news is concerned. Therefore, it tested 21,770, which is also the monthly low of the Nifty. Now, given the fact that this low was made in possibly the worst sentiment on Dalal Street, it assumes significance, and it was also the 21-week exponential moving average which was tested on the Nifty. So you have a strong upward chance given the fact that two positives have happened in possibly the worst possible moment as far as April was concerned. So that is a big plus. Let's look at the other positives, and we'll also face some negatives that are
right. Well, apart from this, we will also keep an eye out on the kind of move that we have been seeing across the global cues. The Dow Jones ended higher on Friday, but the S&P 500 and the Nasdaq sold off sharply, courtesy a 10% drop in Nvidia, which saw its worst day since March of 2020. Both the Nasdaq and the S&P 500 fell for the 6th day in a row, so the handover from Wall Street is tilted towards the negative. Only the Dow Jones managed to eke out about 0.5% gains, but look at the Nasdaq, a 2% fall is what we saw, and for the S&P 500, a 0.8% dip as well. When we talk about the Asian markets, they rebounded from the Friday's sell-off as well, as investors look to fresh data points out of China and Japan and South Korea this week as well. So those are the kinds of updates that we've been looking at from across the globe, Wall Street and the Asian markets. Remember, the Hang Seng is the one that's showing about a 2.2% uptick. Kospi is up by 1%, Nikkei is up by 0.6%, and Shanghai is just up by 0.1%. Trends in the GIFT Nifty are indicating a gap up start for the Indian benchmark index. The GIFT Nifty is indicating a strong start with a 139-point uptick, or a 0.6% of an upside start. Shail is back with us. Shail, you were talking about what to expect on the Nifty and the Nifty Bank.
Yes, actually, I believe there was some kind of a disconnect. Okay, that's not a problem. We'll sort of resurface. You've mentioned the positives as far as the Asian markets are concerned. As far as the Nifty is concerned, there are a host of good points that have happened. There was a hard bottom that was made on Friday, which essentially means that in the worst form of sentiment across the board, whether it was geopolitically or economically, the Nifty made and tested a 1-month low, which is 21,780, and from then on there was a very strong bounce back. The Nifty bounced back from its 21-week moving average, and the Bank Nifty moved up from its 100-day moving average. Both of these assume significance because they happened at a time when sentiment geopolitically was at its worst. Now, between Friday and now, there has been a cooling off period. Crude oil has dipped 6% from its most recent high of $92 a barrel to about $85 a barrel. As far as the dollar index is concerned, in the US, it's down for the second day in a row. And we also have the foreign institutional investors who collectively before Friday for the 4 sessions sold about net 17,000 crores worth of shares. They have now eased it at about 129. It's a positive number that's coming for Friday, so that's a relief. And the Nifty options chain, which is one of the most crucial indicators for intraday suggestions, has seen a very strong built up of support at 22,000 levels as far as the Nifty is concerned. Fresh addition of about 19,750 calls options has happened at that level. So that's a strong support as far as the Bank Nifty is concerned. The 100-day moving average was tested on Friday and a strong bounce back happened. 47,580 is where the index shut shop, up about 500 points. If you look at the intraday bounce, that was 800 points. So all round positivity as far as markets are concerned. Now let's look at 2 other events. There were earnings from Wipro and HDFC Bank. HDFC Bank overall is positive as far as fourth quarter is concerned, although a lot of people might quibble at the slow pace of growth as far as quarter is concerned. Wipro's negative, no doubt on that. As far as mid caps are concerned, you have very strong earnings coming in from Ireda and Sterling Wilson. During the weekend today, you have Reliance Industries declaring its fourth quarter 6 p.m. Then you have earnings of Hindustan Unilever, Maruti, ICICI Bank and Axis Bank during this week. So it's going to be a very heavy event specific week as far as Nifty and Nifty earnings are concerned. And that, ladies and gentlemen, is basically how the markets have been reacting. I would imagine the positives outnumber the negatives, and you have an uptick of about 125 points on the GIFT Nifty. I presume that the Nifty will open with a gap up of 70 points. That essentially means that 22,200 is where the daily battle between the bulls and the bears will be. Sakshi.
All right, let's talk about what the flows have been. So the FIS shares, they bought worth about, the sold shares worth about 129 odd crore rupees. Domestic institutional investors sold shares worth about 52 odd crore rupees as well, as far as the flows are concerned. Now, when we talk about the crude oil prices, remember the WTI crude prices are now trading at around $81.7 per barrel. That's down 1.6%. The Brent crude prices have also eased from their toppish move, $86.7 per barrel, down by 0.34% odd is what they are trading at. Also, of course, apart from the stocks that Shell has mentioned, there are many others also. Let's start off with the HDFC Bank that Shell has already mentioned as far as the earnings are concerned. But let me tell you about the brokerage houses update as far as HDFC Bank is concerned. So Jefferies has come out with a buy call on target price here. They have raised to 1880 rupees. Morgan Stanley has come with an overweight call on HDFC Bank, and their target price is 1900 rupees, whereas Motilal Oswal is the one which is the bullish, very bullish one, with the target price of 1950 and a buy call on HDFC Bank post the earnings as well. As far as Jio Financial Services are concerned, we'll keep an eye out on that too. The company reported its earnings. The total income went up by 5.2% at 141 crores versus 134 crores. Net profit was up by 10.3% at 78 crore rupees for this quarter. IREDA already mentioned by Shell. Here the total income was up by about 34.5% and the net profit was up by 32.6% for the quarter. Tata Steel is going to be in focus. NCLT here has approved the amalgamation of Angul Energy with the company, so we'll keep an eye out on this one. Central Bank of India will be in focus. The company has signed an agreement with Aditya Birla Sun Life AMC for the distribution of mutual fund products. Laurus Labs is in focus. The US FDA has completed inspection of the company's API manufacturing facilities in Andhra Pradesh, and the inspection was conducted in April from 15 to 19 without any 483 observations as well. HDFC AMC and other earnings on the front. It's reported a net profit of 43.8% growth at 541 odd crore rupees. The revenue was up now 28.5% at 695 odd crore rupees as well. Apart from this, Amara Raja is going to be in focus. The company has bagged about 700 megawatt solar project from Greenco in Andhra Pradesh as well. So those are some of the stocks that I'm looking at. Two more stocks, in fact, Biocon, that's got an approval from South Africa regulatory authorities for Tarcomelis capsule, so that could be a positive one for the company. And Lupin has got a US FDA nod for launching its generic tablet to treat the overactive bladder as well. So those are some of the stocks that I am keeping an eye out on, Shail.
Sakshi, I think two or three things deserve mention that we are also having it on our radar. It's the Bankex and the Nifty Midcap Select, which will have their monthly expiry on Monday today. And of course, all eyes will be on Reliance Industries throughout the day. Remember, this is the second heaviest weighted counter in the index, which is the Nifty. You have HDFC Bank's earnings being reacted to because they came over the weekend. Reliance reports at 6 p.m. Today. So it's going to be a very, very hectic day. And of course, you mentioned earnings from Ireda, Geofinance. Geofinance in particular has been consolidating near record highs. I'll be very, very interested in looking at how the performance will be. We'll soon be joined by Mr. Sharad Avasthi. He's the head of research for private client group at Calcutta-based securities called Smiths. He's a very okay. Sharad is with us. Good morning to you, Sharadji. We were just informing our audience about your imminent arrival, and I will fail my audience if I don't mention the fact that it is very, very difficult to get a stock advisory out of you on the long side, because you are a very, very cautious watcher of equities, and any froth is what is dismissed right there in front of us by Sharadji. Good morning to you. Your first reaction to HDFC Bank's earnings?
Good morning, Ji. I think more or less in line with expectations. There are not much was expected from the quarterly numbers, barring the fact that advances were a tad slower and deposits were gaining some traction at last. So that would result in some improvement on the CD ratio. But other than that, I think the long-term trajectory that they're talking about is still very positive. They are still talking about decent growth in the years to come. And as we all know that since it's listing at what, $30, I believe HDFC Bank has always been valued in terms of the growth it can clock in. And I think after a lag of around 5-6 years, for the first time, the merged entity is expected to clock in very healthy growth rates based on the expansion that they are doing and the synergies within the group as the merged entity starts to operate at full stream. So I think there is a lot of cross-selling opportunity within the group. As it gradually materializes, you could see a lot of improvement. The quarter results, I would say it is more or less stable. In terms of valuation, I think it should trade at somewhere around, 1900, 2000, considering it claws back to 3.5 times price to book over a period of time.
Okay. A very good morning to you, Sharadji. First up, I also wanted to understand from you, when we are talking about the earnings, what did you make of Geo financial numbers this time around? That's another one that everybody is keeping a keen eye out on. And of course, apart from this, what would your big expectations be from the big boy Reliance Industries today?
In terms of GOC, I think to expect quarterly numbers to be something great right now would not be very sane. It's a long-term story. I think in the long term, the way the whole ecosystem has been set up for them is very interesting. I think the funnel is more or less ready. They just need to push through the products to that funnel regularly. That's the case with Reliance as well. But with Geo, I think the total ecosystem that they've developed is very substantial in terms of the Kirana network, in terms of, the payment banks that they can push through, the JV with the mutual funds, etc., and advisory. I think all that is very attractive, but NBFCs or any kind of BFSI business is gradually a slow trade. You don't really pick up. Maybe Geo does it faster than most others because the broader infrastructure or the reach is already ready, so they might push it through at a faster clip. But if you are waiting for something to happen on the quarterly results over the next 1, 2, 3 quarters, I think you could be in for some disappointment. There would be more or less, steady, stable kind of numbers, not much happening. But once all these plans are in place, I think long term over the next 2 to 3 years, this could certainly be something that I would love to watch on. But if you have a lesser time horizon, say 1.5, 2 years, I don't think you're going to make a lot of money out of this stock based on quarterly numbers, etc. Because most of the businesses are in the initial stages. And as they scale up over the next 3 to 4 years, I think there is substantial money to be made here. A lot of re-rating can happen. But immediately, I think maybe it's fully to fairly valued. Initially, we were working with targets of 350, 400. It's already there. And I think based on the current holding that they have and the valuation that works out, even if they get 4 times price to book, 5 times price to book, it's roughly fully valued. I don't think there's much scope from here and not much to read out of the quarterly numbers. They're still very nascent. Regarding Reliance, I think again the refining margins have been more or less stable, so they should do good. Geo and the retail side has been doing very well. I think even the FMCG launch has been very well. The products have picked up very good pace in a very fast time frame because of the distribution reach, etc. Where again Reliance has got an edge. And I think most of the products for Geo, I think ARPU improvements over the next 1.5, 2 years. That's the mood across the telecom industry that could drive substantial improvements. Though it would be better for Reliance because most probably Geo has already taken some improvements on the table while Bharti is still to take most of it. And the O2C business and your refining business should more or less be stable. The driving thing could be how they plan the whole renewable space and the new energy space or the hydrogen space and how they speak about the commitment there and developments there. That could result in some improvement. In terms of value, I think 3,100, 3,000, that's roughly the value SOTP that we are putting onto it. The upside trigger could come from the renewable business or the alternate energy business, how they shore up the plans there. And I think long-term Geo and retail should drive. They've already become substantial parts of the SOTP. Barring that, there are a lot of small startup investments. They would gradually pick up. But more or less, you can expect, a 10-11% kind of top line growth this quarter as well.
Okay. Sharadji, if you look at the overall macro tailwinds as far as the economy is concerned, net direct tax collections are up somewhere in the vicinity of 17%. They've exceeded all, how should I say, bullish estimates, and it's a lot of macroeconomic buoyancy that is visible across the economy as we go to vote. Now, when you look at the macro balance sheet of the country, what are the positives apart from buoyancy in tax collections that you see?
See, I think indirect, direct collections both have to be taken into account. Regarding the tax collections, the number of taxpayers have been added substantially over the last few years, and that's a very big positive. I think the urban shift is something that is going to continue happening in the country. There are a lot of tier 2 cities that are becoming much bigger hustle and bustle areas for the country, and they would drive substantial improvement going ahead. The per capita improvement obviously is a part of this. And the way connectivity has gone up in terms of infrastructure, in terms of both digital as well as physical, the more and more connectivity we develop across the rural belt, I think gradually you will start to see a much lesser difference between the rural and urban systems and the ecosystems, and that should be very positive for the country. You cannot grow with 25% of the population. You have to be inclusive. The rest of the 75% has to come into it. The women workforce is actively starting to contribute to the workforce. I think that's a very big addition that India can do, and the traditional view is changing. A lot of it has changed in the urban side of it, but the rural side of it needs to see that change happening over the next, 5 to 10 years. And I think most of it should happen. And add to that, the GST collections also, even if you look at the numbers, most of the manufacturing seems to be in an uptick. Most probably over the next 1.5 years, capex, which we have not seen for quite some time now, grow at a decent rate, finally seems to be coming off. So that's another positive. So I think rising per capita income, more of urbanization, more inclusive growth, where the rural and the left out states, as to call it, which have been part of the country's ecosystem for quite some time now. If you look at, say, the Bimaru states, Bihar, Chhattisgarh, MP, the Northeast was totally ignored. Now, these are big population area, big geographical areas. If they are included into the whole ecosystem, they could substantially improve. So I think that is a very big trend that will play out, and that this big population starts to drive growth. you could see a lot of growth in a lot of spaces. So that is why we have been very bullish on the air conditioning space or the cooling space, I think, or even the consumer durable space. These are things which should see additional, spending over the next 5 to 10 years.
Okay. Sharadji, I'll ask an odd question to you. Your view on Tata Motors against the backdrop of the cancelled visit of Mr. Elon Musk, the owner of Tesla. Tata Motors was sulking for about 2 weeks or so because of possibly the imminent entry of Tesla into the Indian EV ecosystem. Now that that visit has been cancelled for the next 5, 6 or so months, let's say postponed, what would your view be on Tata Motors?
Based on this view, I would not like to form an opinion. I think both companies are at different price points. If you are looking at just the India part of the total passenger vehicles and the electrical business, it's still minuscule. If you look at the top line contribution, maybe it's something, even then it will not be material on a consolidated basis. It will be material, it will not be material on the bottom line basis because the Indian numbers are still not material in the bottom line calculations. It's still JLR largely. So to make too much out of it, yeah, emotionally you can make too much out of it, but practically not much has to be made out. The second part is that what valuations is Tata Motors trading at, what did I do at these valuations? I think it has enjoyed a stupendous run and I've been bullish for quite some time now. But $1,000, I think a lot of re-rating has to come in from the local businesses. Part of the JLR business turnaround that has to happen has already happened. So a lot of improvement to expect from that business would be very difficult. In pockets, it would improve, but that business usually commands the premium cars, usually commands a lower multiple because of lower growth rates. So JLR is going into a turnaround because of the Chinese demand coming back and all that happening. So that is why growth looks robust. But that's not sustainable over a long, 2, 3 year kind of horizon. The domestic side of the business, I'm very bullish on. I think the passenger vehicle, CV business, once, scrapping rules and all that come into place, even the CV cycle could see a very strong uplift. So Tata Motors could benefit out of this. But at these valuations, I think there is little to make out of these over the next, 1.5, 2 years, 2, 3 years. I don't see much happening. And the competition would largely, get higher only in the EV space. VinFast is also expected to come into India. So these are things that will happen over the next 3, 4 years, and Tata Motors has to be in its right place. But I think they'll be able to cope up with that pressure. In terms of valuation, I think it's a bit fairly to fully valued at these prices. I would not like to venture into it at these prices.
Okay. Sharadji, what about the auto ancillary space? That space has been in the thick of action. We've been seeing, stunning moves over the last 1 week, 10 days odd, and the entire space has been moving in tandem. A part of it, we were thinking that is probably due to Elon Musk's visit to India and probably some kind of tie-ups emerging for EVs, etc. But despite that also, if we remove that factor too, do you believe that this is a space that will be a strong long-term story for investors, and how should one really approach this space?
Yeah, in terms of it being a long-term story, Sakshi, I do certainly feel it will continue to be a long-term story. There's no doubt about it. Because autos, as we earlier spoke about that urbanization is a trend, higher income, higher disposable income is a trend. So I think the ownership of cars is certainly going to go up. Infrastructure is already catching up. So I think that's not a problem. Barring the cities, obviously, we certain metro cities, we don't see the infrastructure happening because there's no space available. But rest of it, if you look at the highway connectivity and everything, I think there it is going up. And there are a lot of tier 2 cities that could come up that could substantially aid growth for most auto companies. And that in turn should translate into higher earnings for these auto ancillaries. The additional cream that they could get is out of these new companies coming into the country, whether it's a VinFast or a Tesla. And these could provide substantial growth to these companies. And abnormal growth will come in from the EV segment because the penetration levels that are expected there are substantially higher. So the growth rates for, a normal auto company might be 10, 12%. But for the EV space, we could be seeing, over the next 5, 7 years, the whole space bolstering into a 200, 300% growth or 2x, 3x growth over the next, 5, 10 years. So the growth there will be substantially higher. So most of the companies that have a major share catering to those EV companies, they are substantially going up. But in some cases, I think the prices have run up a bit too far. and they would find it very difficult to justify because a lot of sentiment thing drives, on the EV side. You mentioned an EV and the prices go up. But if you want to look at auto ancillaries, I think Lumax Auto and Lumax Auto Tech, I was looking at these two companies and they look like decent bets. The valuations are not stretched like the rest of the pack. Even Motherson could be a good name, some other than Motherson, that is, for another 15, $20 maybe. But rest of the pack, the famous ones which are really connected to, the EV space and how that transformation will happen, whether it's Motherson wiring, or you could look at Sona BLW or something on the Minda side. I think most of these might be a bit stretched in terms of valuation, and they will have to justify it with very high growth rates for sustained periods of time. So I think that's where the challenge is. Once these orders start materializing, I think I would wait for that period or for a substantial dip in these stocks to create positions. But the other auto ancillary space, whether even without the EV addition, the numbers are still looking good and the valuations are attractive. I think some other than Motherson on the larger players, and on the smaller companies, Lumax and Lumax Auto Tech, both companies look good.
Okay, fair enough. Motherson, Samvardhan Motherson, Lumax Auto and Lumax Auto Tech. We'll keep an eye out on these. The other brief part that you were mentioning in your earlier answer was that you were getting positive on the air conditioning space as well. There's a new brokerage house report that's come in on Voltas. They've upgraded the company to buy with a target price that they've raised from 885 earlier to 1800 now. And they believe the company could surprise on the market share in the room air conditioner segment. They also believe that there will be a surprise on the market share reaching 23% from the existing 19.5%. On Voltas and on the entire space, where exactly can you find value as of now?
Well, the entire space I'm bullish on, I already said that. But in terms of what would happen in Voltas in the short term, I think at $1,200 it's roughly fairly valued. Now it's again expectations that a lot of improvements will happen, market share would gain, numbers would improve, and everything would happen. But that's again expectation, and there is a lot of competition in that space as well. And I think a lot of challenges would also come in because in terms of efficiency, most air conditioning still lags. And in terms of affordability also, a lot of improvement could be seen from the cooler side as well, because in India still air condition and the billing of air condition is not something that everyone can afford. Coolers remain a much preferred option, preferably if you are not living in the coastal regions. So I think that is one space where you could get some decent valuations. On the AC side, I think, long term, I'm very bullish. Even the Voltas can go up. It's a strong domestic player. But you need to spread it out. I think we are very bullish on the space over the next 5-10 years, even longer. So if that is the time horizon, that's perfect. But in the short term, I think at 1300 Voltas does seem like fairly to fully valued, unless and until the forward numbers are revised substantially higher. Because this year, obviously, there is a lot of expectation and excitement regarding the numbers. But on the smaller side, I think Symphony could be a good bet you could look at, and you could spread your bet on air conditioning across Voltas and Blue Star.
Okay, as far as North India is concerned, the summer is deepening its hold across all northern states and even parts of Western India. So, cooler makers like Symphony, air conditioner makers like Voltas, Blue Star, and brown good makers such as Whirlpool have actually climbed substantially on traders as well as investors' radars. Ladies and gentlemen, we are now at pre-open trades, and it's a beautiful bounce up on the Nifty. I know this is not going to hold, but let's enjoy it while it's there on the screen. An easily 350 point bounce, but this will settle sensibly somewhere between 70 to 80 points. Now let's look at stocks that are contributing to this one. I'd first like to see HDFC Bank. It's trying to open 4% higher, 1600. Remember, this is the earnings boy that declared the numbers post market close on Friday. 68 points higher. This is a very, very welcome change. Reliance, the second heaviest weighted stock on the Nifty, will report its earnings today. It's trying to open 33 rupees higher, 29.74. What's really, really positive, ladies and gentlemen, is that all 10 index heavyweight stocks are in the green. They point to a very, very decent kind of a up move that we are expecting from a 1 month low that we saw being made on Friday. Okay, now let's drill further. We have L&T. 4% higher, 36.70. This is a bit of a surprise to me. How about HDFC Bank? It is now settling sensibly, still up 3.5% at about 15.75. How about Axis Bank and ICICI Bank? They will report their earnings this week. ICICI Bank is muted, 2 rupees lower, 1065. Axis Bank is 3 rupees higher, 1032. We'll take a very quick detour into the PSU basket. Remember, IREDA has reported its earnings. Ladies and gentlemen, it's 16% higher, 187.90. Will this continue? Only time will tell. There is an extreme level of buoyancy in the market, and that's getting reflected in how stock prices are reacting. A quick look into what the FNO space is doing, and then we'll again head back to Sharadji. Sterling and Wilson, remember, these are the only two stocks that I was watching on the mid-cap space as far as earnings are concerned. 10% higher on the maker of solar panels. IREDA, strong earnings, 15% higher, 185.85. Let's also look at what's happening in the most active space within the FNO setup. Let's look at the gainers in this list. There are Lupin, which has launched a capsule in the US markets, 3% higher, almost 1600. Biocon ticking away merrily, 2.8% higher, 269. L&T still a strong show, 2.3% higher, 3594. Let's look at the NSE 500 and then we'll go back to our discussion. JSW Energy 4.5% higher, 654. Policy Bazaar 4% higher, 1214. Voltas, this is something that Sakshi and Sharadji have discussed, 4.5% higher, 1360. And of course we have Triveni Engineering, 4% higher, 399. This is a sugar play. The index is still 200 points higher. This is a very welcome change, ladies and gentlemen. We have 22,367 on the board. No complaints as far as Sakshi and I are concerned. Sharadji, in this opening, how do you see the markets from now on? And I believe Mr. Rodra Murthy, research head of Vachana Investments, has also joined us. Rudraji, good morning. Your view on the Nifty opening?
Very good morning. See, today we are seeing no escalation whatsoever in the last weekend, and all those shorts who already took last week, they will be waiting to cover. And see this gap up, whatever you are getting today, about 200 points odd on Nifty, this will make those guys who are already short in market to cover their short. Market is in fact 1 lakh plus contracts on the short side when you see even FII data. FII having sold for a long time, if you see the data on Friday, for the first time their selling has stopped. Now all this news, even no negatives from HDFC Bank, and all this to me will ensure that there will be more short covering to come today, plus fresh buying to also add up. And from the very strong support zones of around 21,800 on Nifty, we will see a bounce. And today if we close substantially over 22,300, that will confirm to me that the pre-election rally is on and market will head towards all-time high. Bank Nifty will also see more short covering, and I am expecting Bank Nifty to go towards 49,000 very soon, and then eventually you will see more stock specific moves also to come. Broader market will also participate. This is a market to buy every day.
Okay, this is the market to buy every dip. Very good morning to you, Mr. Rudramurthy. And could you also share with us where exactly would you be buying this dip? Any particular two stocks that you can share with us?
Definitely, yes. See, first of all, for me, Axis Bank on private banks looks very strong. No doubt it made the dip towards levels closer to 990,000 rupee zone, and from there a very strong support emerges for Axis Bank. So I will be a buyer in Axis Bank, looking at targets of around 1080 to 1100, keeping a stop loss of 990. Another very strong stock which I like, which is available in F&O, is LIC Housing Finance. For me, LIC Housing Finance is getting that accumulation pattern. 630, 640, very, very strong support area, from where even in a market like Friday, when SGX was opening 300 points gap down, LIC Housing Finance was very strong. I am looking at targets of around 680 to 700 to come on LIC Housing Finance, keeping a strict stop loss of 625 for this long call. And one more very strong stock to me is PFC. PFC, if you observe on Friday, again when markets were negative, this was outperforming. I'm trying to pick stocks which were really doing very strong on Friday when we were seeing that huge gap down in the open. And PFC is also one such stock. I will keep a strict stop loss of around 385 and looking at big targets of 440 to 450 on PFC. All the three stocks what I'm mentioning, Axis Bank, LIC Housing Finance and PFC, are available in F&O. So if you consider the futures margin what you have, the moves whatever can be seen in these three stocks, you have a lot of money to make in F&O, going long in futures in Axis Bank, LIC Housing Finance and PFC.
Okay. So Axis Bank, LIC Housing Finance and PFC, the three stock ideas that we will continue to watch out for. How would you trade HDFC Bank, sir, today, Mr. Rudramurthy, after the earnings?
See, first of all, HDFC Bank had no negative surprises in the result, even though I can understand fundamentally going through the numbers that there were no big positives also. But what is important is how was the pre-positioning? Also, where is the stock currently trading? These are important technical things what one has to watch. For me, 1,450, 1,460 is a very strong positional support. So I will be a buyer in HDFC Bank at current level or on any dips to levels closer to 1,450. I am expecting HDFC Bank to definitely outperform, except for HDFC Limited's merger. Fundamentally, other than this news, there is nothing else which is holding the performance of HDFC Bank down. So for me, HDFC Bank is a buy at current market price, buy on dips to 1,450 levels, and look at targets initially of around 1,700 to come, and eventually a stock can move towards 1,750, 1,800 zone also. I remember people making fun of ITC when it was 200, where stock was making no moves whatsoever. But once it started the move, it doubled in 6 months. That being an index stock, it is not a mid cap or a small cap. Similar to ITC, you will watch HDFC Bank now. Everyone are tired of HDFC Bank, and this is the time normally these big stocks will make a big move.
Right. Let's just shift the focus on IREDA. The counter is trying to open about 11% higher. Sharadji, coming to you first. A strong set of earnings. Profit after tax for the fourth quarter has moved up substantially to the tune of about 33%. Revenue up 34% in the fourth quarter. Margin expansion has happened. EPS growth is up. And there has been a substantial dip in both gross and net NPAs. Your view fundamentally on the stock?
Shanji, I believe it's fairly to substantially overvalued, because if you consider the numbers right now also, they are reporting what, around 5.5 rupees. And in case this 30% growth does translate or continue over the next 2-3 years also, I think they are still trading at 4.5 times forward price to book. Even if 2 years, your book value just inflates to around 40-45 rupees with a 30% growth in earnings, I think you are still trading at a bit on the higher side, 4.5 times. So I would not be very comfortable buying into this. If I have to pay this kind of valuation for the renewable energy space growth, I think I would be happier buying a PFC or an RSC, which are still trading at much decent valuation vis-a-vis any IREDA.
Okay, that's a note of caution that's coming in on the valuations of IREDA despite a fantastic set of numbers that have been announced for the fourth quarter. Getting in Mr. Murthy, an 11% gap up, Mr. Murthy. Would you be sort of buying into IREDA or probably waiting for more sensible prices to come in?
See, I fully agree with Sharath, very clearly mentioned. It's just not the good result. Where are we opening today and where are the current stock prices? That also makes a very important decision before someone for short term or for investment looks to buy a particular stock. So for me, this stock has moved up too much. No doubt results are good. If you are getting a 11-12% kind of a gap up, definitely book profits. I don't see a good risk reward to enter after this gap up open, nor even before that at 180 levels. For me, this stock has done too much, and I would rather prefer either a PFC or an REC than IREDA at current level.
Okay, we'll try to get a line graph made for you as far as IREDA is concerned, and 11% at about 179, 180 will bring the stock to its highest level since 16th of February, ladies and gentlemen. Remember, the all-time high for this counter is 212. Given the enthusiasm that is there on the charts and the fact that our fundamental analyst is really cautious, we advise you to take another independent view whether to get into the stock at current levels or not. Sakshi.
Right. Apart from the power space, there is another hot space, and that is the QSR space, the food delivery space specifically. And I'm talking about Zomato, which has constantly been on the rise, and the company has now increased the platform fee by 25%, and the stock is currently looking at an opening of 2% higher at 193 odd levels again. Sharatji, first to you. I think in August of 2023, the company started to charge this platform fee at just 2 rupees, and a few months down the line, it increased it to 3 rupees. In January this year, it increased it to 4 rupees, and now it's up to 5 rupees as well. It's a subsidiary company that's Blinkit. That's also just started to charge a platform fee or a handling charge of 2 rupees as well. How are you really looking at this continuous increase and focus on the platform fee, and how that is going to really add on to the realization and margins for Zomato, and does it make a good long-term story now?
Yeah, it was always a good long-term story. It is only how far prices have run up in anticipation of that long-term and how much of that long-term is already discounted into it. This improvement largely will translate, most of it will translate into bottom line typical platform or service business. Like we talk about, a mining company or a telecom company where any kind of top line addition, usually your expenses are more or less fixed and do not really vary along with your top line improvements. So this kind of increase is actually very positive for the company. Most of it will translate into bottom line improvements. But considering the size, I think what kind of improvement FY25 we are expecting 1.62 kind of earnings for the company. FY26 2.86. So maybe you inflate it by 25-30% additional because of this event. Even then, what are you looking at? 3.5 rupees kind of earnings, and even then it's trading at around $200. So I don't think there's much left on the table because of these valuations. Wait for a risk off that plays out in the market when these stocks do correct substantially. I think that will be the time to accumulate. Otherwise, your waiting time might be a bit elongated. So it's better that you wait for a risk off that comes in the market, and then you get into these stocks at much lower prices rather than at such exaggerated numbers.
Okay, just 30 seconds for you also, Mr. Rudramurthy. Technically, how does Zomato look to you before the markets open?
See, very short-term support is at around 175 to 180 zone. So someone wants to buy, wait for the dip of 175 to 180 zones to buy, or else more or less the stock has run away from those levels of 40-60 rupee to now close to 200. Risk reward doesn't favor a fresh entry here. So I will avoid Zomato or book profits if I have closer to 200, 210 zone.
Right, ladies and gentlemen, we are opening gap up as far as today's markets are concerned. Monday will start on a very, very good note, 138 points higher on the Nifty, 21,270, ladies and gentlemen. I'd just like to see the earnings boy HDFC Bank. Let's see what it's doing. HDFC Bank is up 0.5%. Now it's in the red, 1534 for you. How about Reliance? It's the earnings boy today, almost flat, 4 points higher, 29.45. The Nifty is strong. Let's see what's the strength coming in from. It's the banks, ladies and gentlemen. Nifty Bank also 350 points higher, 47,900. ICICI Bank is up 1.1%, 1,079. Remember, it's the earnings boy along with Axis Bank this week. The numbers on Axis Bank are 13 rupees higher, 14 rupees higher now, 1042.8. L&T is the star for today within the index heavyweights, 40 rupees higher, 35.61. We'll go immediately to the most active counters. I want to see what Irida is doing as far as prices are concerned. Remember, it's okay, 10% higher, 177. This is the highest since February 17th. Earnings buoy, Geo Finance 2.8% higher, 380, almost a fresh record high. Sterling and Wilson Solar taking it away, 2.8% higher, 578 for you. Very strong move coming in Hind Copper, 5% higher, 82. How about Infosys, flat as flat can be, and Zomato. Sakshi and Sharadji and Rudra have discussed this stock. Now 3.5% higher, 196. No let up in the entire brokerage space. Motilal Oswal Financial Securities 4% higher, 23.21. What else is clicking? The Nifty is now 137 points higher, 22,285. This is a very strong opening. The IT index is 86 points higher, 34,435. The Nifty Bank now 332 higher, and the Nifty 500 almost up 0.8%, 20,554. Given the weakness that was there on Thursday and all of last week, this, ladies and gentlemen, is a fantastic opening. 19 out of 19 indices are in the green. The advanced decline ratio is fantastic, 1740 shares in the green compared with just 150 in the red. Rudra, coming to you first. What catches your interest in this fantastic opening? What are you looking at?
See, I am definitely focusing on Axis Bank, which I just mentioned, flying at day's highs right now, having opened at around 1030-32 zone. So Axis looks very strong to me, and if I have to buy another one from a broader market, definitely yes, it is PFC. So PFC at around 400-402 zones, and Axis Bank at around 1045 right now. So these two looks very strong buys to me. Another very interesting stock and chart pattern what I see is in SRF. This stock again was very strong on Friday, and I'm trying to pick stocks which really outperformed in a bad market, and when good market comes, these stocks will definitely do much better. So SRF is another stock which looks very strong to me. One can buy at current market price of around 2,540-550, looking at targets of 2750 positionally on SRF. And all these stocks which I'm talking, like PFC, LIC Housing Finance, Axis Bank, SRF, these are all stocks which are available in F&O, and one can definitely look at going long positionally in these stocks.
Okay. Mr. Rudramurthy, I'll also draw your attention to the entire metal pack that's continuously shining bright. Nalco is up by 6.3% in the F&O space. Hindustan Copper up 5.7% as well. SAIL is doing well as well. At this point in time, it's up by about 2.6%. So the entire pack is again on the move. And Tata Steel and JSW Steel from the heavyweight counters that continue to move up. How are you looking at the buzz in the metal space, and which counters will you choose as of now?
See, I'm very clear. I don't know the fundamental reason, but technically I can tell you metals are doing way good, and it will continue doing good. So for me, metal is a sector to be long, definitely. And every dip in sale to levels closer to 140 right now, or even at current level, buy. And if you get any dips to 140, 145 zone, add more into SAIL. SAIL is a stock which can head towards 180 to 200 zone, and my top pick, both based on valuation comfort and on chart, will be SAIL from metal pack. Another stock from the large cap, if I have to pick, and where I have comfort in both fundamentals as well as chart, is Tata Steel. So Tata Steel on current market price and on dips to 155 to 160 zone, it is a buying zone. And again, I'm looking at targets closer to 180, 200 to come on Tata Steel. No doubt all other stocks like Nalco, Hind Copper, Jindal Steel, JSW, all this will do good. But for me, if I have to pick, keeping in mind both risk reward as well as valuation comfort from metal pack, I'll be picking number 1 SAIL and number 2 will be Tata Steel.
Okay, we'll keep an eye out on the metal pack. Since we're talking metals, we also need to keep an eye out on the precious metals, gold and silver. It's opened with a dip. in today's trading action. On the MCX, gold is down 700 rupees per 10 grams and silver is down by 1200 rupees per kilogram as well. So a dip on the precious metals after a long haul of continuous surge on the upside. Sharaji, to you, we were seeing this constant move on the upside as far as gold and silver are concerned. We were also keeping an eye out on the gold finances at the same time as well. How are you looking at these two spaces, precious metals and the finances?
Typically, I'm not very bullish on precious metals, specifically gold. Silver still has some industrial uses that does help. But given the geopolitical uncertainty, there has been an uptick. So I think if you are betting on a collapse of the financial system or a larger problem on the geopolitical side only, then gold does make sense. And what I'm expecting is that in the second half of the year, most probably the currency should, Indian currency particularly, should start appreciating vis-a-vis the US dollar as the bond inflow start. That would not be very positive for rupee gold investments. Partly, a lot of the appreciation in gold prices is also because of the rupee depreciation. So long term, I'm not very bullish on gold. Short term aberrations or as a hedging because of geopolitical tensions, that's fine. But long term, I don't think it's going to deliver any kind of value. The second point is gold finance companies. I think these companies go through a problem period of 1 or 2 years in a 7-8 year cycle. Over the last 1.5, 2 years, they have been going through that pain point. That's more or less behind us. The LTVs are more or less healthy, and the influx of new entrants into the space in the form of banks and other players, and even the smaller NBFCs. That is gradually, peaking out, and no further influx would happen. And they have also tasted the water and understood the challenges. Usually, any kind of BFSI business, there is a 3 to 5 year cycle within which you try to understand how the business operates. The initial level is just lending, so it's very easy. But then the harder part comes in, which is the recovery part. So I think they have tested the water, and it's a very granular market. And Muthoot, Manappuram being leaders in the business would benefit out of that. And I think the 2.5 year cycle, down cycle that was there in the markets for gold finance companies is behind us. And gradually they would start trading at 3.5. So now most of the cream most probably is gone out of these companies because the valuation uptick that has to happen has happened largely. But with growth continuing over the next 2-3 years, I think they should continue to gain. So you could look at another 10-15% upside for both these companies.
Okay, ladies and gentlemen, let's now look at what the market is telling us. So it's the PSU pack that's moving very, very sharply. I track 78 PSUs, and out of 78, ladies and gentlemen, 76 are in the green. So you can well imagine what the move is. The only stock in the red is ONGC that's reacting to a slip in global crude oil prices. Across the board, metals are taking this rally forward. Look at Hindustan Copper, 386 for you. Now this is a multi-year high, probably the highest since 2011. The counter's up 5%. There is no stopping the banking space. Let me mark the Nifty PSU banking index. This is the second best performer, 1.5% higher, 7,034. And within this index, there are 12 PSU banks, ladies and gentlemen, all 12 are in the green. Let's look at new highs. This is a list that I often point out, especially when things are bad. But we should also equally pay attention to these stocks when things are good. Okay, Elecon engineering is up 3.5%, 1207. Remember, this is back after a very, very strong bout of earnings. The counter was up 12.5%, 13% on Friday. National Aluminium, we've discussed many times, 2.6% higher, almost 190 on the screen. Thermex and Trent, top counters in terms of corporate earnings as well as brands. 49.45 for Thermex, 2.5% higher, 2% higher on Trent. Amongst the wealth management space, you have NAM India and Motilal Oswal Financial Services ringing record highs. Metals are represented by, on the steel side, by Jindal Steel and Power, 1% higher, 936. HAL, KPIL, Bharti Airtel, Linde India and M&M. These are the counters at fresh record highs in a market that is working out really well. Sharaji, this question is for you. The wealth management space has recently shown a strong traction on the long side. Any stock that catches your fancy and is in the sensible matrix that you often talk about? undervalued and underappreciated?
No, I think across the board, I would not really look at any of the wealth management companies as very attractive. Maybe Edelweiss does make the cut for targets of around 85, 90 on comparative valuations. Even an Angel one could look good. Sorry. But I think most of these stocks are trading at a fair valuation, and the risk with comparative valuation is that if the more expensive ones get normalized in terms of valuation, the other ones will not look that good. But considering the current situation, I think maybe an Edelweiss looks good for 85, 90 kind of targets, or Angel one in terms of valuation after this correction. But the rest of the pack, I think some are obnoxiously valued. I can't really understand what is going on.
Sharat ji, also wanted to take your view on the cement space, especially on Ultratech cement. Morgan Stanley has come with an overweight rating and a target price of 11,600 after the company has announced plans to buy a 1.1 million ton grinding unit from India Cement for 3.15 billion rupees. The stock has moved up again, 2% higher. How would you look at this large heavyweight from the cement pack?
I think within the cement bag, if I have to bet on one of the larger players, I think Ultratech obviously trades at premium valuations because of the distribution reach and the type of operational metrics they have been delivering over the last many years. But in terms of valuation, I think if I have to look at a company which can deliver some improvements and get re-rated substantially, I think ACC makes the cut after this Adani takeover. I think there is a possibility that the EBITDA per ton should improve substantially. Some part of that improvement has already been developed. But I'm expecting a lot of developments to happen over the next 2-3 years, and most probably there is a high probability that ACC plays catch up in terms of valuation with Ultratech. So I think that would be a very good bet to play on rather than Ultratech, because I don't think there are levers in terms of valuation multiples improving for Ultratech, but ACC has that in place. So I would be comfortable betting on ACC for that improvement rather than Ultratech.
Okay, a bet on ACC versus Ultratech at this point in time. The other space that's passing is the entire oil and gas space, especially the OMCs, Mr. Rudramurthy. I'll come to you with that. BPCL, HPCL, IOC. Again, the kind of move has started after some bit of consolidation with the crude oil prices now easing a bit. What are the technicals really telling you? Is this a space to continue to invest in or accumulate more at this point in time, or is the best of the rally behind us?
See, for me, if I have to buy OMC, you have to track the crude oil prices internationally very closely, and then I have to take a call. But when I see the oil prices move now around $88, $90 per barrel on Brent crude, this tells to me ideally more or less at this level, plus or minus $5, $10, it can consolidate. So stock wise, yes, if I have to pick between BPCL and HPCL, I will pick HPCL on chart. And if you see Hind Petro, yes, there is strong support for this stock. Definitely there has been a lot of buying also happening in Hind Petro, but BPCL, Hind Petro, IOC, all these stocks, unless you have a longer time frame and you are expecting crude oil prices to come down, then only I will suggest you to go long on these counters. And my top pick in this will be Hindustan Petroleum. Support is at around 445, 450 zone, and yes, stock is making an attempt to move beyond this consolidation zone, now at around 495. So if we see a close above 495 today on Hindustan Petroleum, yes, stock can move towards its earlier highs, which can be towards 550, 570 zone. And second pick for me will be IOC. IOC is another counter, again having moved up enough. This stock is right now consolidating at around 170 zone. Yes, if it makes a move beyond levels of around 175, 176, yes, again it can go back towards its highs at around 190, 195 zone. But however, if I have to play crude, I will rather buy Interglobe Aviation on every dip. This is a stock one should definitely have in your portfolio. Keep aside crude oil price movement up and down. You had great chance to buy Indigo when crude was moving up, and when Indigo stock was giving you an opportunity to buy at lower level. So for me, if I have to play crude either directly or indirectly, rather than OMCs, I'll be betting on Indigo. Buy at current level, buy 100 rupee higher than current level. Have it in your portfolio. This is a stock which one has to have, that is Indigo.
Okay, ladies and gentlemen, Indigo 3681, again reclaiming its upward thrust that is there in the market. 62% market share in a booming aviation sector is what Indigo is looking at, and a dip in crude oil prices is a sentimental positive for this carrier. Okay, now let's just look at the broader thought that's running in the market. Metals is in fine shape. Let's get Mr. Murthy into the conversation as far as Hind Copper is concerned, 5% higher. Rudra, would you stick your neck out?
See, when Hind Copper was available way lower at around 150, 160 zone, yes, I was so positive. Even at current market price, I'm positive. Definitely not to short this counter. It is in a roaring bull run of its own. But my only point is, what is the risk reward as a trader you have buying Hind Copper at current levels of around 390 zones plus? So for me, the risk reward is not favorable. Wait for any dip in this counter to buy as a trader, and I will be waiting for levels closer to, let us say, 360 or 350 to make a fresh entry. And I will not short this counter, but definitely I will not buy at current level, because risk reward is not in my favor. I cannot buy stock at any price, and for me, definitely risk reward matters a lot as a trader.
Okay, so that's the view coming in as far as Hind Copper is concerned. Just dial. Again, this is an earnings-led theme that is doing wonderfully well. The company reported its fourth quarter on Thursday, and this is again a blowout. I have 1092 in front of me, and the price is, well, not an all-time high, but inching closer to what we have seen in July 2015. Since it's already up 3 days in a row, we'll just mark it on the screen but not take a technical view. The charts look overstretched. There is no stopping Hind Copper. The volume and price action are phenomenal. We've already discussed HPCL, IOC and BPCL. Given the drop in crude oil prices, what's clicking well? I think the index Nifty is now sensibly poised. We've had the first 15 minutes of trade. Let's look at the high and low of the first 15-minute candle, ladies and gentlemen. The high is 22,337 and the low is 22,234. So a move above 22,337 is something that we will be looking forward to on the long side. And I think, Sakshi, today is the day of sugar stocks. We track 33 sugar stocks, ladies and gentlemen, for you. Yes, Ugar Sugar 7% higher, Trimeni Sugar 6.5% higher, Awadh and Shakti Sugars are 4% higher respectively. Strong move coming across the board. Magad Sugar, Kothari Sugars, Bajaj Hindustan, across the board, ladies and gentlemen. Sugar is adding that much needed sweetener to Dalal Street. Sharaji, coming to you, your favorite sugar stock, if any?
Balrampur Chini, I think that's a no-brainer. The type of they have also added one major capex with a new product diversification. So I think if I have to choose one out of the whole lot, Balrampur Chini would be my bet, because in the long term that would also play as a trigger over the next 1.5 to 2 years once that capex starts yielding results. And beyond that also, I think in terms of integration and efficiencies also, they have always proved to be better than the rest of the industry. So I think Balrampur Chini would be a good bet, and I think with this recent correction, valuations are not very expensive, though you may not be timing the cycle exactly for the sugar prices. But broadly, I think it should be a good bet to have over the next 1.5 to 2 years.
Okay, a lot of stocks are buzzing at record high levels. Let's look at some of those stocks. Of course, Nalco we've discussed amidst the metals pack. That's at a fresh record high at the current levels. We're also seeing Trent move up at the record high level as well at 4280. The stock is up by 2 odd percent. That one is moving up. You also have JSW Energy. That's again moving at a fresh high, 637 right now. and again this stock is up by about 1.7%. The other one is Thermax, that's again moving at record high levels. So 4894 is the current level at which this stock is also moving at. Let me just discuss trend first with you, Mr. Avasti, and do tell us, how do you really look at this retail play? This space was in the thick of action some months ago, during I think Diwali or so, but after that there's been some bit of consolidation. How do you really look at trend and the retail space?
Well, I'm very bullish upon the retail space. I think as we have spoken earlier, as urbanization improves and your per capita improves, your additional expenditure on food doesn't really go up. So the natural lifestyle improvement should cater to most of the additional expenditure that you do. So most, lifestyle brands or even consumer durables, they should get a larger share of the wallet of most consumers, and that should see a very strong uptick. But this is a gradual story over an 8 to 10 year period that plays out. For Trent, I think Zudio has done wonders, and it's been a very low cost business for them in terms of low asset requirements, still a very booming business. And they seem to have churned out a very good niche in that space. But again, valuation wise, I think though the earnings have been upgraded substantially, even 1 year forward earnings over the last 1 year have been more or less doubled. So right now, FY25, we are talking about around 40 rupee kind of earnings, and it's already trading at 4,000 bucks, 4,200. So I can't really understand how many years are we discounting forward, or how much upward revision, because beyond Zudio there's not been much magic. But yes, that is something that can be scaled up into, I think, many tier 2 cities, and even within the cities on the suburbs, you could have a lot of opportunity out of Zudio. And there is a market for that. They have fathomed it, and I think that should play out very well. But how much upward revision can happen to the numbers from here on? I think the first leg has been very strong, but from here to gain again on this, that you expect another 50%, 100% kind of a revision on the numbers, I don't think that's easy to happen. So at these valuations, I would better avoid it. But generally on the retail side, I would be very positive. So I think NABFRL could be a good bet with a lot of brands under the belt. The stock has seen some corrections. Now with the restructuring, reorganizing happening, I think the fair value on an SOTP could be somewhere around 280, 290 on the stock. So that could be a good story to bet on.
Okay, fair enough. Well, thank you so much, Mr. Avasti, for being with us on the show and sharing with us all your key insights on various sectors and stocks. Always a pleasure to host you on Business Today. So thank you so much, and we'll get you very soon back on our channel and on the show Market Today too. Let's continue our conversation with Mr. Rudramurthy. In the energy space, again, we were discussing the OMCs, and now let's also discuss some of these big movers like JSW Energy, that's constantly moving up. Of course, apart from this, the entire power space is up in the move. How are you really looking at this space right now, Mr. Murthy?
Yeah, see, JSW Energy, after consolidating for last 7 trading session, it has today given a break above those levels of 630. So any dip in JSW Energy, I will be a buyer. And if it closes today above levels of 630 zone, that confirms to me that yes, this consolidation is now done and stock can further go up. So I will be a buyer in JSW Energy. Keep a stop loss of around 600 and look at positional target of 700 plus to come on JSW Energy. So if I have to pick few more stocks from this power sector, and if I have to pick even from similar ancillaries to that, so one is Power Grid, another very good stock. This is consolidating now at levels between 270 to 285. So if I see Power Grid making a close above 285, yes, again a fresh up move can be seen in Power Grid. The stock can move towards 320 to 330 zones immediately, and then post that it can further go up. So for me, JSW Energy, Power Grid, and even stories like PFC, REC, having made already the correction what it has to move, it is back to its original trend, which is only on the upside. So for me, PFC, REC, Power Grid, NTPC, JSW Energy, these are all stocks definitely one has to have in their portfolio, and even for trading, every dip is an opportunity to enter and stay on the long side for these stocks.
Okay, ladies and gentlemen, let's look at the other part of the market also. We've seen a very enthusiastic opening as far as Dalal Street is concerned. We'll focus for a while on stocks that are in the red. The first one that comes to my mind is Gujarat State Petronets Limited. This is down about 4.5% at 302, and the selling seems to be accelerating. There is news from the sector regulator which has tweaked the pricing of Gujarat State Petronet. I'll get you some more details. The counter's down 20%, ladies and gentlemen, and this is not on low volumes. 270 crores worth of transactions have happened. FPO Boy, Idea Cellular, is down 3.5%, 12.45 for you. Today is the last day of the 18,000 crore rupee FPO that is open in the market. Persistent Systems, earnings boy again, very strong set of numbers, profit booking coming in despite that, 3.7% lower, 37.36. Sentimental negative, the cancellation of the visit by Mr. Elon Musk as hitting auto ancillaries. Motherson Sumi down 3%, 123.12. What else is moving lower? Schneider Electric, this is something that I'd like to highlight. Last week, Goldman Sachs came out with a report pointing to very, very sharp outperformance on the stock price. They had downgraded it, and from that point onwards, it's still down. 708 is what you see. Remember, the record high here is somewhere like 815. There's no stopping Zomato, 1.8% higher, 192.55. And let's look at the broader markets. Now the Nifty sensibly 90 points higher. The early part of the enthusiastic opening is now giving space to sensibility and common sense. The Nifty's low for today is, ladies and gentlemen, 22,234. Should the index go down below that, then probably the gap up of today will then be filled. So far, I see fairly decent price moves. Very, very strong action in PSUs across the board. Earnings boys rejoicing. And of course, there is absolutely no let up when it comes to metals. Ladies and gentlemen, Hindustan Copper at a multi-year high, actually a decadal high. Record high on Hindustan Zinc, 414. Let me just look at metal stocks in the FNO space. Okay. Hind Copper we've discussed. Mr. Murthy, coming to you on National Aluminium. Record high, strong long build-ups, very strong delivery statistics, and of course an uptick of 8% in open interest. What are the charts of National Aluminium telling you?
Sharath, I very well remember last time in your show, we spoke about National Aluminium, and that time it was at around 140, 150 zone, and it was a mouth-watering buy. Even at current level, I'll be a buyer in Hind Copper or in National Aluminium, but only thing is risk reward is not favoring me, but I will surely not short them. If I have existing long position, definitely it is a hold. But only thing is fresh buying after this gap up, the risk reward is not favoring. But if I have to comment specifically on levels for National Aluminium, look at the chart 189. That has been the resistance zone, and that has been the levels which it made on 10th of April. Now today it is making a move above 189, and if we see a close above 189, yes, stock will be very strong. It can even move towards levels of 210, 215 zone. So I will be a buyer on National Aluminium, provided it stays above 189 today, which is a very crucial breakout zone. And on Hind Copper, use any opportunity of any dip you get in this counter to buy. But if I have to play the metals sector as such, I'll be buying SAIL at current level and even Tata Steel at current level. And another proxy, if I have to look into, yes, look at stocks like Hindalco, look at stocks like NMDC. So these are stocks which are much better at current market price, because I'm seeing what is the next probable move. Do I have space in these stock prices to go up from current level? So at current level, if I have to buy, I will prefer an NMDC, I will prefer an Hindalco, and similarly Tata Steel and SAIL will be my buys at current price. However, if I have Nalco or Hind Copper, I will continue holding long positions in them.
Okay, so that's as far as the metals pack is concerned. The other space that is passing in trade today is the pharma space. So beat stocks like Lupin, that's up and about in the F&O space, about 3.1% odd. Zydus Life is up by 2.4%, Torrent Pharma up by 1.9%, Shalby Hotels is up by almost 2 odd percent as well. Solara Active Pharma is up by 6.8%. You have Morpin Laboratories, that's up by 3.4% as well. Of course, the laboratory stocks like Unichem, Alchem, they are again on the move. Syngene is up and about. So, a whole host of stocks that are moving up in trade today. Mr. Murthy, could you highlight for us, is this space something that you're looking at positively on the charts, and which are the stocks that you'd like to highlight from this space?
See, for me, pharma, yes, can definitely be a sector kind which can perform along with the index. And if I have to buy one stock from pharma, it will be Biocon. Look at the risk reward at current market price to buy Biocon. At current market price, no doubt, yes, it went to F&O ban, and that's the reason why stock for from yesterday to the previous trading day to today, it is just not making any big move, and it is in F&O ban. But one can definitely buy it in cash market at levels current price of around 262. It's a great buy. Keep a very tight stop loss at 255, which is hardly 7 rupee from current market price, and I'm looking at this stock moving towards 300 to 305 zone immediately, and that is like a 1:5 kind of a risk reward. An upside from current market price, which is about 40 rupees, and I am giving about 5 rupees kind of a stop loss. It is in fact 1:10 kind of a risk reward. You cannot miss it. Buy Biocon, keep a tight stop loss of around 255. Look at targets of 300 to come. If I have to pick second stock, yes, Lupin is one stock which has been an outperformer irrespective of market, and the trend is clearly on the upside. But however, the stock is now consolidating for a very long period. Wait for dips in Lupin to buy closer to 1,500, or else I will prefer Biocon as the only name in pharma to buy at current price.
Okay, Biocon as the only name, and if at all, then one can really look at Lupin. Apart from this, let me also talk to you about the other defensive, and that's the entire IT pack. We are looking at some moves coming back onto Wipro after the earnings. The company beat the earnings estimates as well. Although the brokerage houses were, not happy with the kind of weak guidance that the company has given out, but the stock is up and about 1.5% higher at 459. How should one approach Wipro?
See, two stocks to clearly buy in IT, and I'm very, very clear these are stock specific call. One has to go on the long side. That will be number one Wipro and number two Tech Mahindra. So in IT, if you have to pick stocks, yes, for me Wipro at current market price of around 460 is a buy. Keep a tight stop loss of 445 and look at targets of 500 to come on Wipro. My second pick will be Tech Mahindra, and current price of around 1,200. It's a great buy. Look at targets of around 1,280 to 1,300 to come on Tech Mahindra, keeping a very tight stop loss of 1,190. So buy Tech Mahindra and buy Wipro. These are two very specific calls on IT if I have to pick, and I will be only long in these two counters if I have to pick from IT.
Okay, ladies and gentlemen, let's look at the railway universe. There is hectic activity afoot, and it's the PSU railway pack that's doing phenomenally well. Railtel 3% higher, 376. There is a very, very strong breakout happening on intraday charts, whether it's 25 minutes, 5 minutes, even the 75-minute chart on Railtel is looking really good. We've seen the stock bounce from a low of 368 intraday to about 376, so that needs to be kept in mind. There is absolutely no stopping Hind rectifiers. Fourth day of gains, right there on the charts, a record high. Earlier it was up 10%, it's now up 6% only. Remember, across the board for the last 3-4 trading sessions, the counters in thick trade. Ircon 1.5% higher, 220.75. RVNL 1% higher, 261. IRFC a percent higher, 142. Remember, all these stocks are very, very high beta counters. Mr. Murthy, to you, your favorite railway stock for today?
It will be IRCTC. So for me, I want to bet on those stocks where you have good liquidity, and as a trader, I always believe you have to be in good stocks. Even by chance for a trade, it doesn't give you the move immediately. Positionally, at least it has to be strong enough to hold. So for me, IRCTC is a buy at current level. Might be, yes, it is now giving you an opportunity to buy after a good correction for last 4 or 5 trading session. So I will be a buyer at current market price, and on any dips to 970, I will be a buyer in IRCTC, and I'll keep a strict stop loss of around 950, and I'm looking at initial targets of around 1100 to come on IRCTC. And if I have to pick another mid cap or a small cap kind of a stock, yes, for me, you can either go with Railtel or go with even RVNL. These two stocks have done lot of consolidation for last 2-3 months, in fact. So I will be a buyer in RVNL at current market price, and on dips to 250 zone, keep a stop loss of 225 and look at targets of around 300, 320 to come on RVNL. And if I have to give you levels on Railtel, yes, Railtel is also now, after having consolidated for a very long period, is trying to give a breakout. I will be a buyer at current market price. Keep a stop loss of around 350 and look at targets of 450 to come on Railtel. So Railtel, RVNL and IRCTC are my top picks from here.
Okay, ladies and gentlemen, it's 9:50 now. Just 10 minutes left for the market today show to be wrapped up. Let's look at volume buzzers. I have highlighted Gujarat State Petronet for you, still down 20%, and about 5.7 times the 5-day average has been traded, 91 lakh shares. Trivedi Engineering is something that we must look at, 7% higher, 15 lakh shares have been traded, and they represent about 3.4 times the 5-day average. Strong moves coming into Persistent, but that's on the negative side, 5% lower. Remember, this is the second year in succession when Persistent has on an annual basis posted a revenue of more than $1 billion. We'll keep an eye on that one, but certainly a lot of profit booking happening. UTI AMC 4.5% higher, 938. It joins NAM India, it joins HDFC AMC in hitting fresh 52-week highs, given the fact that a lot of SIP money is coming into the mutual fund industry, and of course markets are consolidating near record highs. What else is clicking away merrily? Voltas 3.5% higher. We've been talking about this stock since morning. Almost 1348, 19 lakh shares have been traded, 69% 5-day averages. What is there? These are stocks that are now moving on very, very heavy volumes on the long side or on the short side. Another trick that I do is looking at circuits on the higher side. Okay, should I name a few stocks here? I'll take the risk. J Corp, 324, 10% higher. What else should I point out? Transformers and Rectifiers Limited, the management had joined us last week discussing its quarterly numbers. It's been a single one-side move for the last 5-6 trading sessions. 5% again up today, 697. Remember, the entire power pack, whether it is power producers or power ancillaries, are in thick trade, because in the first 15 days of April, power consumption has surged 11% to a record high of 70.2 billion units a day. To you, Rudra, your top pick in the power ancillary space and the power producer space.
See, for me, I've already mentioned those names earlier. So if I have to pick up any of these stocks, yes, at current market price, I'll be a buyer in stocks like Power Grid, NTPC, and even from power financing side, I will be looking at PFC, REC. So for me, all these are stocks which can definitely be bought at current market price. Valuation comfort is there. And let me tell you, PSU rally, which has just started about 1.5, 2 years back, that is not just a rally to end, and it is not just dependent on NDA or Modi government and things like it. For me, the valuation comfort is still there at current market price. Even PSU banks, for example, SBI, or even look at PNB, look at Canara Bank, these are all opportunities where, yes, no doubt it has moved up too sharply in last 1.5 years, but these are areas where one can buy every dip and still stay on the long side, where still money can be made. For me, the rally in PSU is a decadal rally and not a 1.5 year kind of a rally. But only thing is, yes, if you can buy it at good prices, along with comfort in terms of the fundamentals performing, if you can add it at current market price or at good entry level, that will give you a more margin of safety and a better profitability for you to make. So for me, PSUs are a decadal theme, and especially from power, if I have to look at NTPC, look at Power Grid, and from power finance companies, PFC, REC, even look at stocks like Coal India, and for me, even PSU banks, which I mentioned, my top picks being SBI, Canara Bank, and PNB. These are all stocks from these sectors, especially PSU, which can definitely do good even from current market price.
Okay, just 5 minutes to go before we wrap this show. Mr. Murthy, if you could also highlight for us, what do you really look at Reliance Industries? Because of course today we will be watching out for the stock ahead of its earnings. Tomorrow the company will be reacting to the earnings numbers. This time it's a Monday instead of a Friday that the company is announcing its earnings as well. But what is your own sense, technically speaking, as far as Reliance Industries is concerned? How do the charts look?
See, for me in today's market, what do we need is no negatives. Even if we don't get big positives or big surprises, market doesn't want any uncertainty. So let it be from the macro geopolitical tensions, what we are seeing between Israel, Iran, or look at even what is happening in terms of inflation and the data which is coming out from US, or specifically from India. If you see, we don't want any negatives. For me, Reliance is consolidating now for last 4 to 6 months. And yes, the stock has not given up any of its gains which it has made previously. So for me now, the stock is consolidating and the range is very broad. It is between 2,800 on the downside to around 3,000, 3,020 on the upside. It's a 200-point kind of a range. So if we break this range, then yes, a move will come directionally. So I am positive. So I will be buying every dips to levels closer to 2,800 on Reliance. I know it is very far from now. It is about 140 point, but I'm not looking at 10-20 rupee kind of a movement in Reliance, and I'm not looking at intraday or a very short-term time frame. Yes, positionally Reliance looks very strong. Any dip to 2850, 2,800, it is a great buying zone, and let Reliance move away from this consolidation zone. Once it crosses 3,000, 3,020, you will not get the stock to catch at right entry level. It will just zoom and move towards 3,300, 3,500. So I will be a buyer in Reliance at current price. Every dip to 2,800, 850 buy. Wait for stock to cross 3,000, 3,020 and see a move towards 3,300 to 3,500.
Okay, well, on that note, thank you so much, Mr. Murthy, for being with us on the show and sharing with us all the thoughts and various stocks that you've shared with us. Truly a pleasure to have you with us on Business Today TV. Let's start wrapping up the markets for this morning edition, viewers. So about a 0.4% of an uptick is what you spot on the Nifty right now, 22,235, about 90 points higher. The Nifty Bank is contributing about half odd percent as, the kind of moves that we are seeing on the index, 215 points higher, 47,787 currently. Sectorally speaking, all the sectors look into the green, with larger parts of the positives coming in on the PSU pack, that's up by 1.3%, real estate space, that's up by 1.2% odd, and of course substantial moves also being seen on the private banks now, and the healthcare index as well, along with the mid and the small cap space that continues to buzz even at this hour as well. And all the sectors are in the positive with some gains, a slight bit of gains coming in on the financial services space. That's just about 0.1% higher in trade, but rest of the spaces all look positive as of now. In terms of the top contribution to the index today, we're looking at some of the stocks like Axis Bank, that's contributing 13.5 points to the gains as far as the Nifty is concerned. Remember, Mr. Rudramurthy had Axis Bank as one of his top picks. L&T, ICICI Bank, Bajaj Finance and Bharti Airtel are the top contributors to the Nifty move today. Along with the kind of moves that we are seeing on the Nifty, Hindustan Copper remains a top mover, 6.5% higher. Nalco follows suit, 4.8% up. HPCL, BPCL again about 3.5 to 4.5% higher in the F&O space, followed by Apollo Tyres now and Voltas are some of the other movers on the F&O space. Shail.
Ladies and gentlemen, 10 a.m. today, and a fantastic move as far as the Nifty is concerned. Remember, it made a hard bottom on Friday amongst all the global uncertainty, and then had an intraday move of 350 points, ending 150 points higher on Friday at 22,150. From then on, it's been an unsatiated set of buying as well as short covering that's pushed the Nifty even higher. The battle for the two bulls and bears is 22,200 for you. We've seen a very strong gap up happening, about 140 points. Now that is getting consolidated at 22,230. The Bank Nifty is up 222 at about 47,800, and we hope that this trend will continue. Remember, we are in the final stages, the final week of April's FNO expiry, and we are right bang in the middle of national election season. Stay tuned on Business Today for all your financial news needs, and keep on watching us. Thank you so much from Sakshi and my side, as also our PCF. Thank you.
Sir, you've casted your vote. It's a very important election as far as the party is concerned. What is expected on June 4th in terms of vote share? And
It will be a historic election, madam. I'm very supremely confident now because people